Good morning from the Money Show in Orlando. I am Amelia Bordeaux. I'm the owner and founder of Market Compass, and I am here with Christine Benz, and I'm very excited to speak with Christine. She is a director of personal finance at Morningstar.com. She is a senior columnist for Morningstar.com. She's the author of several books, and she was the former director of mutual funds at Morningstar.com as well. So good morning, Christine. Glad you could join us.
Thank you.
I would like to start off with a question that I think that a lot of investors and sometimes investment professionals too get confused about, and that is the fixed income market. I think in times of volatility, and also now that we've seen kind of a switch from the Federal Reserve from hiking to pausing rates, and we don't exactly know what the outlook for the Fed is for the rest of the year. People are disagreeing on that, whether or not they'll hike again. What's the right way to think about fixed income in a retirement portfolio?
Well, I think you need it. A lot of investors have come through the past few years and have really been questioning that because we've been seeing yields be quite low. But I think it's premature to give up on bonds. You do need that ballast for your equity portfolio. You need something that has the potential to go up a little bit when your equity portfolio is going down. So you absolutely need some safer securities in your portfolio. One thing we've seen simultaneously, though, with the Fed series of rate increases is that we've seen cash yields get a lot more attractive. So that's what many investors have been wondering about. Why am I monkeying around with the interest rate related volatility that comes along with bonds when I could hold cash instead? Right. I think the thing you need to keep in mind is that you do want cash in your portfolio. If you're retired, maybe think about a couple of years worth of portfolio withdrawals, living expenses in cash. But then from there, I think you want to maintain the expectation that bonds, short and intermediate term bonds, high quality, will generally outperform FDIC insured cash instruments.
Okay.
So you don't want to overdo the cash allocation.
Okay, great. Thank you for that advice. And how can we find your research? How can we find you and your expertise?
All of my research is available on Morningstar.com. So I have done a number of model portfolios. I read a few articles a week. That's all a part of our free Morningstar.com. It's not part of our paid service.
Great. Thank you so much for your time.
Thank you, Amelia.
It was good to meet you.
Nice meeting you too.